What is up, everybody? Welcome back to the channel. I know it's been a while, but I thank you for joining me today. Let's talk about a few things because it's been a few days and I wanted to kind of do a sort of an all-in-one news weekly kind of video. I don't know. It's just something I'm trying out, so go with me on this. So yeah, we're gonna do that. Just so you guys know, I am not a financial advisor. This is just for fun. Just for fundertainment. I like to use that word. Fundertainment purposes, okay? So this is not financial advice. I am not a financial advisor. I'm just a guy on the internet who likes to trade stocks and likes to tell everybody his opinion. So take it with a grain of salt. That's what it is. I am not licensed. So, this isn't financial advice. While you're here, hit the like, hit the subscribe buttons. Appreciate that. Hit the notification bell, and don't forget to share this video with your friends. With that being said, let's get into it. So, we're going to go over a few articles on MarketBeat. By the way, guys, I love MarketBeat. It's like one of my favorite stock websites. So if you get a chance to check it out, definitely do so. A lot of cool stuff on there. So first thing we're going to do is they have an article called 3 Stocks to Buy Ahead of Black Friday. So one thing I wanna let everybody know about is Black Friday is not like Black Friday of the past, right? Like no one's gonna be out in crowds. Crowds are basically banned, right? We all know why. So I don't know why everybody thinks like the same concept applies. Like where I work right now, they're preparing for Black Friday like business as usual. And in my head, I'm just like, it's not gonna be business as usual. It's totally different. So I just don't. I think people forgot what everybody's going through right now. So. Anyways, let's take a look at this. Let's see what the 3 stocks to buy ahead of Black Friday are. All right, so Target. I could actually agree with this. It's funny that Target came up because my girlfriend was calling me earlier, and she's like, "I gotta go to Target today." She loves Target, but I could see this. Target's one of those stores. It's not like Walmart or anything, but it is a all-in-one kind of like department store. You pretty much get anything there. I mean, you get electronics, toys. I mean, you get household stuff, food, clothes. I mean, everything's at Target. So it makes sense to me that this would be a good investment. Target's been making money this whole time anyways. Ever since the whole pandemic started, they haven't really suffered at all. So let's take a look here. Reported blowout earnings again, right? It's for obvious reasons. Small business is suffering, guys. A side note, if you get a chance to invest in, or not invest, but just to buy from small businesses during this time, I've been upping my money into small businesses, trying to like buy food from small businesses, go into small business like grocery stores, things like that, help them out. They really need it. Target will live. But anyways, yeah. They've been blowing it out the park. I mean, it's pretty safe to say that this is a good guess right here. So we'll move on to the next one. Oh, I revealed it. So you guys already seen it. So we have Sonos and the UPS, right? So UPS makes total sense. They're going to be giving, UPS is going to be delivering tons and tons of packages. They got to the point where they were backed up this year to where stuff was delayed days at a time. Pretty crazy stuff with UPS, but I could see this being a good thing. Now Sonos, I think they're like a surround, they're surround sound, right? Like they do, they're basically a home audio system. Like I don't know anybody who really has like crazy home audio anymore. This just seems kind of like a weird one. Like for Black Friday, it seems like a really random, like a random guess. Like I mean, there's just seems like there's so many other stocks that they could just throw in the Black Friday article, but I don't know. I would say 2 out of 3 of these make sense. I wouldn't really go with Sonos. This is too niche, and especially right now, I don't know. It is what it is. Anyways, so that's the first thing, guys. I thought this was a pretty cool article. If you weren't investing in Target this whole time, you should have been, because you would have been making some money. UPS, I'm not really bullish or bearish on. I'm kind of down the middle. Let's move into the other news. So it is Sunday night in the United States, which means it's Monday afternoon in Asia, and the Asian markets are going wild, all except the Japanese markets, because I guess it's a holiday in Japan. But they are pumped that we are going to have vaccines soon. So markets are going through the roof. Pretty much everybody's reporting high earnings, right? In Korea, I guess the Kospi, which is their version of like the stock market, is jumped 1.9%, which is pretty high. Sydney's S&P ASX, whatever, I'm guessing that's like their S&P 500, added another another 0.5%. Shanghai went up by another 0.9%. So Hong Kong lost some percentage to their total market, but I mean 0.2% is not really a big deal. And then whatever the Indian Sensex, I'm guessing these are all just the market names, right? This is a 0.1%. So people look to the U.S., right? They know that we're driving these these cures and these vaccines, and they're like, cool, that's going to help out. So when they see the U.S. market succeed, they know that things are looking up. So this totally makes sense. Although the S&P 500 did lose 0.7%. So here's my other gripe here. People will invest in index funds for the S&P 500. Most of the S&P 500 is crap for the most part. There's a lot of companies in there that get carried by other companies in that group. And honestly, ETFs are probably, or the ETF funds or index funds are probably carrying a lot of the other companies. So you have companies like Apple, and like now Tesla is going to be in there, right? And Google and Amazon. They're carrying all these other companies with the index funds because those companies are getting a piece of their pie. That's my opinion, at least. But I don't know. When I look at the S&P 500, I like to divvy it up by the companies I like. Personally, I'll do index funds, but I'm not like all the way on index funds. It's too boring for me. So yeah, good news. Asian stocks, always a good thing. Now, the next thing I wanted to do, guys, is I wanted to talk about 3 stocks that I saw that these are just kind of like some good stocks that are coming up to take a look at, and I wanted to go over them with you. And yeah, if you're interested, check them out. These are just kind of like things that I saw that I thought were kind of good buys for different reasons. With the first being, Cardtronics, right? So Cardtronics is basically like an ATM company. They help people set up ATM services, and just any services really related to cardholders, right? Like cashback, balance inquiries, like any kind of financial like services related to like getting information through an ATM or anything like that, right? So it's currently a buy, I believe. Let's take a look here. All right. So they say it's got a a total rank of 1.6 or whatever. This really got me right here. Price target's $39.60. Currently sitting at $22.86. So this is actually pretty good. I like money, right? So money's good, right? This is damn near doubling, right? The price target is damn near doubling. A couple things that are a little concerning. Debt to equity ratio is a little high. For every dollar in assets, they're spending another $2.31, or they have another $2.31 in debt. So it's a little high for me, but they are making money. Their earnings per share is $2.16, right? So this is okay as long as they're making profits. Their net margins or return on equity is good. Other things I like to look at right now, the trailing PE ratio is $45.72. So basically, people are paying that, like they're paying 45 times the amount, or they're paying 45 times the value in order to trade on this. I like the forward PE ratio. It's 20.23. It's going down. This is a big jump right here. Actually, it's huge. So this is good. I like this. This just tells me it's going to be easier to pay for it. You're going to be only paying 20 times rather than 45 times the value. So good stuff here. And yeah, cash flow is looking good. $6.55 per share. I like cash flow in a company. If there's negative cash flow, I don't like that. So this is good. Let's take a look at the analyst ratings. All right, maybe. Ugh, Jesus. So many pop-ups. That's one thing I don't like about this site, by the way. So many pop-ups. All right. This right here, this is what I'm feeling, guys. This is what I like right here, right? So the price target has been pretty solid. I mean, they've been sticking with this $39.60, right? It's got 6 buy ratings and 1 hold rating. I mean, this is pretty solid work right here. Let's take a look at let's actually go back and take a look at the performance over the last month or two, right? Because I like to look at that too, kind of get an idea. Where's the charts on here? Here we go. This is what I'm talking about. 90 days. We'll do 90 days. All right, so I had a slight dip. You know, you're hitting 18, 19. Dipped down in the 17s. Man, I wish I would have got a piece of it here. Oh, okay. Man, it'd be nice to get a piece of it right there, but you know, can't do anything about it now. Let's look at 365. Here's the dip in March, right? Look how high this was. 46, 45. It's okay, so it's perfectly believable that it's going to bounce back. I mean, you know, right now people aren't out and about. You know, they're not spending like how we would want to because no one's doing anything. But people are going to need ATM machines and people are going to need card services when things get back to normal. So here's that March drop. Boom. Right there, guys. Really bad stuff. Okay. So now what we're going to go ahead and do is we're going to jump into the next stock. This one, yeah, I can see the target hitting him. Next one, Live Nation. Another victim of not being able to do anything. My reasoning behind Live Nation is I actually go to a lot of concerts. I went to a lot of concerts, I should say. And, you know, Live Nation, they have a lot of venues. They're pretty big on the concert going lifestyle. They are a buy. There's a downside right here. I'm not really sure why there's a buy rating. This is more of a long-term hold. The price target's been up to $82. So, I see what's going on here. So, as far as having a high price target, you can hit 82 on this. This is going to be a while before things get back to normal, guys. But, you know, that's how I see it. So, I would say that if you're going to buy a Live Nation, you're probably going to be in for a while with it. So, keep that in mind. Last one, Micron Tech. So, they do storage, right? So, storage devices, you know, think like basically anything related to like SSDs, memory, hard drives, you know, etc. Anything where you need storage, cloud, enterprise services, etc. So there's that. Couple things I love about this. This is what I look for. Debt to equity, 0.16%. Holy crap, dude. 0.16%, guys. That means for every dollar in assets, they only have 16 cents in debt. This is good. This is what we like. P ratio is going down a little bit. I mean, you know, as long as it's going down, it's fine. It needs to dip a little bit lower than this, but that's not too bad. Cash flow is really good. $9.12 a share. Loving the cash flow. Money, 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 money. Right? That's what we want. You know, we want that net income. We want that money coming in. We want money coming in, and we want low debt to equity ratio. No debt means that they can give stuff to us if they want to, right? I don't know if they have a dividend. Doesn't look like they actually have a dividend. Let's see. No dividend. Watch. Yep, they don't pay a dividend for now. Okay, so you know the only thing I really wish this company had was a dividend. Other than that, it's pretty solid. Let's take a look at the charts. Let's see. You know what's funny about this site is you got to literally click below just to get stuff to work here. Okay, here we go. September, hitting a bump right here. Whoa, look at this. It's going up. It's all the way up. Whoa, okay, so you're telling me in the last 20 days we went up $12 a share on this. There may be a pullback. There was some trading sideways going on here. It's really not a pattern. There's not. This one's kind of a tricky one, guys. There was a lot of trading sideways, then the dip happened, and then boom, and it shot up. So we may not be at the bottom of this. This probably still keep going. I would say what I would do is I'd watch and see if this starts trading sideways. See if it starts trading sideways. If it starts trading sideways, then yeah, load up. Because usually when you trade sideways, you're going to get the bump. You know, you're going to, boom. We may have a slight dip and then a raise. So keep an eye on this. And yeah, good stuff. Low debt equity ratio. Can't argue with that. Never a bad thing. Cash flow's coming in. You know, the company's been pretty profitable. Let's see what their 52-week range was 31. So they got down to 31 here. Let's go down here. All right, let's see the last 365 days. They've already recovered. I can imagine them actually going even higher. You got down to here. Wow, 34. You've been raking right now. You've almost doubled your money. Good stuff. Yeah, they're already at all-time high. Yeah, they're trading sideways. Watch this pattern right here. Starts trading sideways. See how it trades sideways? Trade sideways. Boom. To the roof. So I'm going to keep an eye on this. Anyways, guys, that's the video. Let me know what you guys think in the comments. Don't forget to hit the like, subscribe. It's late. I'm going to bed. I'll catch you guys in the next one. Peace.